Hello guys, welcome to this new stock market series. In this entire series, I will start from the very basics of the stock market and I will touch upon the as advanced topic as is there in stock market. For example, I will touch upon the derivatives, which includes future and option chain, and all the other complicated things which now seems complicated, but it's not going to be complicated for too long. So for this particular video, my topic is regarding what is stock market and why company use it. Why just not take a loan and what's the need to dilute your ownership. If you're not aware of these terms, don't worry, I will explain this completely in this video. So let me take example of a company to make everything easy. So let's say this is one company. The company name is XYZ Limited. You know how we have Reliance Industries, TCS Limited. In the same way, I took the name of this company XYZ Limited. And let's say the company has a value of 5,000 crores. 5,000 crore is the value, net worth, you can say anything. Look, everything has a value. If you own a land, that land has a value. If you own a car, that car has a value. So this company has a value as well. That means it's been owned by someone. So it's been owned by, say, Mr. A. Mr. A is an individual. He owns this company, and there's no other person beside him who is the owner of this company, which makes this a private company because private companies owned privately by one person, two-person, or many a group of people, right? When it becomes a public company, it's be owned by general people like you and me. That's a very, naive and simple explanation. But for this example, let's say Mr. A is the only owner of this company, which corresponds that he owns 100% of this company, right? Because when he is the only owner, then he owns 100% of the company. Now, let's say Mr. A needs money to grow this company, maybe to buy certain assets or inventory or to pay off loan or whatever reason Mr. A needs money. How much money? Say 1,000 crores, right? He needs 1,000 crores, 1,000 crore, right? So now there are different ways he can get this money. First, and the most common thing is debt. Right. So basically, Mr. A will approach any bank. Let's say he went to a bank and told bank that I have this company. Why don't you come and analyze the company and give me 1,000 crores? I need it for any particular task. So bank will come analyze the company and see whether the company is actually sound or not. If the company is good, the bank will give 1,000 crore loan. However, the bank is not going to give it for free. It will charge some interest rate. If you go to a bank and take a loan or buy anything on EMI, you have to pay interest rate on that. Your EMI already includes the interest rate. So let's say bank will charge 15%, 15% per annum of interest rate. And the total amount was 1,000 crores. So 1,000 crore, 15% per annum would be 150 crore. Right? So this is how much interest, right? I just write INT, interest Mr. A has to pay to bank every year because it's per annum. Now, this is a huge amount, right? If let's say Mr. A didn't manage to run the business properly, or there's any bad news come like COVID, where entire economy shut down, he won't be able to pay this 150 crore because now company is not making any profit. You need profit to pay this money. Now, when company is not making profit, how will you pay the money? So for mature company means those company who already have a presence for let's say 6, 7, or 10 years, they usually prefer to go for equity. So what does equity means? They usually go for issuing equity, and issuing equity is nothing but just selling your own stake. For example, Mr. A owns 100%, he will sell, say, 10% of his stake. So 10% of his stake is going to be 500 crores, right? Because 100%. If I just take the marker, 100% is 5,000 crores, so 10% would be 500 crores. However, Mr. A needs 1,000 crores. So what he will do is that he will sell 20%, because 20% would be 1,000 crores. So let's say he decided to sell 20% of his company via equity, and he will get 1,000 crore. Now, the advantage is that he doesn't have to pay anything. There's no obligation like interest rate. How there's obligation of paying interest at 15%, doesn't matter whether the company is making any profit or not. In equity, there's no obligation. If company makes profit, then they can pay something which is known as dividend, which can be corresponds as interest rate. You can see it as interest rate. However, there is no complication. So that's the reason why most of the mature company prefer to go for equity, because if something bad happens, as skill companies already mature, there is less scope to grow more. So they prefer equity in that sense. So now Mr. A will go and just raise equity. Now the entire process of raising equity or diluting your ownership is a similar thing, right? This entire process is divided into two parts, which is known as the entire market is called stock market. So, okay, so let me write it down so that you understand better. Stock market. In stock market, basically we have primary and secondary. Primary is a market where the ownership has been diluted or the share is been issued for the very first time. Like how in our example, Mr. A sold his company for the very first time. He sold 20% for the very first time. So this will happen on primary market, 20% for rupees 1,000 crore. This sale is been happening on primary market, and the process, look, everything has a process. Like if you just want to sell your company, there has to be certain process where you need to get some regulatory permission from SEBI. SEBI is the main body who look over the rules and regulation of the stock market, right? So you need to get permission of the SEBI, and there are certain process which need to be followed in order to sell this 20% stock. So this entire process is known as IPO. IPO stands for initial public offering. Initial public offering. This entire process is called initial public offering, and this is been done for the very first time when a company who's been owned 100% privately is trying to go public, right? And once, let's say the company is already public, Reliance Industries and all is already public, now their share is being bought and sell by anyone. I can just go to stock market and buy the share of Reliance, right? So this there's another part of the stock market there which is known as secondary market, for later, let's say, buy and sell. For example, if I show you some practical examples so then you understand better. So this is my broker. Look, there are different brokers you can use, and brokers are nothing but just an intermediaries that will help you to buy or sell. They basically match buyers and sellers. If look, I am here selling and I need a buyer who want to buy that. If there's no buyer, then whom I'm selling? Or if I want to buy, there has to be someone who's selling a stock. If there's no one selling, then with whom I'm going to buy? Just look at it as a OLX. In OLX, you post your ad, and now you have the buyers approaching you on the message. So OLX is the intermediaries. In the same way, the brokers are basically just intermediaries, nothing more than that. So now here in the broker, I can go, there's a search option, I can go and search any company. Let's say TCS, and I've already added Reliance. So I can open the chart of Reliance here. This is the chart of Reliance. The current market price of Reliance is 1275, as you can see on the red right here. So now if I want to buy Reliance or if I want to sell Reliance, I have to sell at this price. So I can buy and sell at this market price because this is the price where the buyers are willing to buy and sellers are willing to sell. So this is current market price of Reliance. I can quickly get similar kind of thing, and then I can just click on buy one quantity, or 40 quantity, how many quantity I require. Look here, 50,960 rupees. One quantity, 1,274 something is required, which is very close to the market price. There's a little bit of difference is because of the spread, which we'll discuss later on. But as of now, I can just set the quantity and click on buy. Now, currently is Sunday. Market doesn't operate on Sunday unless it's whole. Sorry, not Holi, Diwali, because in Diwali market is open for 1 hour in Muhurat trading session. So market is closed now, so my order will not get executed. But if market would have been open, it's been Monday or any other day where market is open, my order would have executed, and then I would have seen my my position here that I have already bought one share of Reliance at 12,175 rupees. But now market is closed, so this is secondary market where you can buy and sell previously issued share which are already trading in the market. So this is basically stock market, and the advantage I have discussed that there is no need to pay anything. In order to make it understand that how big of a thing is it is, let's say this company XYZ Limited makes a gross profit of 600 crore, right? Now, there are two things. If he would have taken debt, then he have to pay interest of, we have calculated 150 crore. So now his net profit would be 450 crore. This is net profit. Net profit means after deducting all the charges and taxes basically. But for here, I'm just taking interest. But when he issued equity, his entire 600 crores goes in the pocket, right? However, it will be shared between the equity holders as well. So if I bought the company by paying 1000 crore, I got 20% of the company. So now the 20% of the profit ideally should come to me, but it doesn't really happen that as such, because there's no obligation in equity side. If company makes a lot of profit, then it can distribute some dividends, right? It can distribute some dividend. However, dividends are completely different from interest because there is no obligation. It's not mandatory to declare dividend every year. If company wants, they can declare. If not, they can reinvest the same amount in the company and grow further. So this is, in short, was the stock market and why company do prefer to raise fund by the means of stock market by diluting their ownership. So this is it for the very first video, and on the next video I will touch upon a little bit more advanced topic. I will try to explain a bit of spread or what are the different brokers, demat account, saving account. I will touch upon other topics on the very next video. So thank you for watching. See you very soon.